The views expressed on the following program do not necessarily represent those of this station or its management.
This is the Stockwell Roueche Show, giving you real-time information you need to make educated decisions about buying and selling in the world-renowned Twin Cities. Now your hosts and real estate experts, Jason Stockwell and Josh Roueche.
Good morning, Minneapolis, St. Paul. I'm Jason Stockwell with RE/MAX Results.
Josh Roueche, RE/MAX Advantage Plus.
You're listening to the Stockwell Roueche Show every Sunday morning at 10 a.m. here on AM 1280, The Patriot. Today, welcome back, Josh.
Well, thank you. I appreciate that, Jason.
So,
I took a break last week, and I had Roxy fill in, so thank you, Roxy.
Part of me kind of
Did you miss me?
Misses Roxy, but I also miss you too.
Okay.
No, I'm just kidding. So welcome back, Josh. Today, smorgasbord topic. We have tons and tons. I could say that word over and over. Try to say that 10 times fast. It's tricky, but so we're going to be talking credit repair and how you can.
I think we got a big show today.
Tons of stuff to talk about.
Right.
Rentals, investment properties, the outlook on those things, all kinds of great topics. We're going to be talking millennials, and then also predictions as far as what's happening in the rental industry and what we see going forward in that. So tons and tons of good information for you. So we have with us in-house today Vanquish AP, which is a property management rental company. We have the CEO, Kyle Jordahl, is with us. Kyle, welcome.
Thank you.
And we also have Envoy Mortgage. Jason Light is with us. Jason, how you doing?
Great. How are you?
Mortgage expert. I'm doing awesome. It's a great day. And we have Warren Bauerfeld, who's been here before, who's credit repair specialist, United Credit Education Services, reputable company.
Very good
we're
company.
Very, very happy to have him here because there's a lot of news going on, if you're paying attention to credit repair, going on with other companies that is not good. And
That
Warren
is not
a
good,
great
right,
company.
right.
So, welcome, everybody. So, Josh, what's happening in the residential real estate world?
I kind of pulled up last statistics from last month, April versus where we were at April last year. We're at a 10% increase in new listings versus last year during the month of April. So that just shows that our market is strong. We're not seeing as many REO properties out there anymore. I think Minnesota is actually fifth lowest in the country.
Way low in REO right now.
Our
Still out there, though.
Yeah,
but
they're still out there. And then the pending sales were up 26% versus last year, too, at this time for last month. So it's a great market. I know I'm busy. Are you guys busy?
Yeah, everything's busy. But here's what you got to consider, folks, is all the data that we're getting. It's I think someone talked about it. Warren Buffett or famous people talk about this. Is that when the market's going up, by the time it's gone up, it's already happened. And when it starts to go down or soften, when
it starts to plateau,
we don't know that because we're going on data that's so great.
Right.
So, like I said before, realtors, we're awesome at projecting news,
we are awesome.
especially good news. So you'll overhear us hype it up, and there might be some overhype. I just want to caution people of that your home still has to be look really, really good. It still has to be priced really, really good, and you still have to account for any negative factors. So everything's great, and it's been the greatest it's been in a long, long time since the market crash. But buyers are very savvy, and they're also being very, very particular. Even they're not buying. There's not many sheep as they call, or to scam or to overbuy. They're being very, very smart in their purchase. So no one wants to have a bad downturn happen again, and if it does, they don't want to be the one holding the bag and have a foreclosure.
Well, even the median sales price last year at this time was at $196. We're seeing our median sales price right now at $215.
Yep.
So we've seen that increase by 10% in the last year.
So you sellers out there, when you go to list your home, make sure that you're realistic and you're listening to your realtor or the realtors you're interviewing, because we're in May, and it changes. It can change quickly. I mean, things are going great, but last fall, July 4th hit, or last summer, July 4th hit, and it was slow down. It slowed way down. I mean, I saw a house that was for sale in 2013 for $180,000 in Richfield, and it would not sell, wouldn't sell. $220.
There was no explanation for it, too.
$220, $40,000 more, no improvements, $40,000 more, pending, under contract right now. That's the swing, the pendulum swing from last fall to now. So,
and I think if you're out there and you're interviewing agents, make sure you're working with a veteran agent that's going to price your home the right way. A lot of these newer agents really don't know what they're doing, and they'll just price it to get the listing.
Yep.
And then it'll sit on the market. And if it's not priced right, you're going to hurt the chances of that thing
And
selling.
go to talktwincitiesrealestate.com. Check out our button on top there that's free home evaluation. You can check that out. And you'll get a free no obligation quote of what your home is worth. Of course, we have to see it in person to give you an accurate value, but you can always go there to get the data of what's going on in your area. So, Jason, thanks, Josh. Anything else?
Well, I would say, the reason that we're seeing so many increase in sales right now is a lot is to do with what Jason has and our lenders and the institutions with the low interest rates and these down payment assistance programs and government changing some of the down payment too, so less of a down payment. So there's a lot of different programs out there for new homeowners.
Yeah, there's all sorts of programs that are opening up to lesser down.
Right. Which is kind of scary because that's what happened before when the market crashed. We had 100% financing, 560 score.
Yeah.
We don't see that yet.
Jason Light, Envoy Mortgage, you guys, you loan officers now that are working your tails off, it is not even close to what it was on the upswing, right? You guys are working like crazy to get loans through, and it's not as simple as saying, oh, here's your approval, you're good to go. You're digging in, diving in.
Well, I think
really, really working on
I think
these
a lot
buyers,
of it too,
right?
Jason, correct me if I'm wrong, is it goes to an underwriter. Underwriter has to actually validate everything, follow these guidelines, and they're responsible for that. So if there's a buyback when they turn around and sell it, that comes back on the underwriter, right? And they could possibly lose their job if they do not.
It can. Every institution is different. We're direct, Fannie, Freddie. We service loans. So, but at the end of the day, what's really happened is the qualified mortgage, the amendment last year with Dodd-Frank, which is lenders are compliant and responsible for ensuring that buyers are, they have the ability to repay. And everything is, can you repay? Like, so these, you can borrow to the world and no money down. They're still scrutinized and there's still heavy compliancy to ensure that all those other risk thresholds are there to protect that, obviously.
Right.
So,
Hey, before you go any further, do you have a number that you want to spit out? Your
my NML, that's a tongue twister. NMLS number 17256.
Awesome. Smorgasbord of numbers.
Yeah.
So what else is going on, Jason Light with Envoy Mortgage, and what's going on in the mortgage industry right now?
Well, Envoy Mortgage, we're very busy. On the market end of things, rates are up for the third week in a row, and they continue to go up. They've been going up, all this week.
Like how much? Because it doesn't seem like. I mean, as a quarter points? Are you talking, or eighth of a point, or what's the?
Yeah, they've bumped, from 3 weeks ago, maybe a quarter. But in our world, when you look at like the shift, the bond markets are selling not only in the U.S., just all over the world, and that's just really spiking it. So on our end of things, it's a lot. At the end of the day, rates are still very low. But it's just trends right now. Oil and gas prices are up. That causes inflation, which is a trend.
Yeah,
a lot of economic factors that go into that.
With all that, though, I mentioned it last week. With the applications, purchases have not slowed down at all. Refis are down, so everything is continuing to feed into the real estate market as far as people buying homes. And then one thing you were just mentioning, the strength of all this. I read something where we are in our 37th month in a row of homes increasing in value, and we're up within 10% of pre-crash. So I thought that was kind of an interesting.
Some areas are surpassed or are at or surpassed the pre-crash, I would imagine, some neighborhoods in some particular cities. Other ones are getting very close. Like you said, within 10% is very, very good. So other parts of the country have actually surpassed quite a while ago. They've surpassed their previous peak.
Isn't that crazy? That's crazy when you hear that.
Yeah. You got Colorado, Denver, and parts of California have actually already surpassed their peak. So, but when Jason, Josh, and myself always say we're very busy, we are, but that doesn't mean we're not too busy for you. So
yes,
you can always reach out. You can call us 651-400-0773. 651-400-0773, or go to talktwincitiesrealestate.com and reach out there. There's a lot going on, and we are full-time active in it. We know see what's going on, and we are here to help. So with that, we'll get into introductions of a couple other guests on the show here that are great. Kyle Jordahl with Vanquish AP, CEO and broker, and it's a property management company. Can you give us a little history of what got you into the business and kind of what you do?
Yeah, absolutely. Started out owning my own properties and bought them while I was still in college, still learning, and it's always been a learning experience since then, but I don't think that's ever going to end either.
Yeah.
There's always something new. From there, we became licensed. John, who's on the show a few months ago, is my business partner, became licensed, started a brokerage, and started managing other people's properties. In the meantime, we needed a better way to manage properties that are pretty spread out, and we developed a software system to kind of automate a lot of the processes. So
Which
now,
is interesting.
yeah. Now we're taking on a lot more investor-type property owners that can see a portfolio that we can build out for them and kind of run their real estate that way.
Their investments, right?
Yep.
So, and then you did this for yourself first and then launched it into a business, or did you always have the intention of going into a business and have this as your main
It kind of
business?
just happened. We bought a property downtown Minneapolis.
Who's got the IT degree to do the
Neither of
backend?
us,
All right.
but John is a little bit more savvy than I am.
All right.
So we bought a property downtown Minneapolis, and it took a lot of our time focusing just on that property. And we also owned others in St. Cloud. So we're trying to think, how can we run both of these properties by not being there all the time?
Right.
And so just building out some tools and using some of the technology that's already out there to kind of speed up the process and make life easier for us.
No. So Kyle will update us later because he has some great insight and inputs on rentals, what's happening with them now, what's going to be happening with them, and then also on investment properties because that is still a very, very active market. There's a lot of money out there flowing every day in the real estate world with it, rentals and investment properties. Also with us, Warren Bauerfeld. Warren, how you doing?
Very good today.
So Warren is with United
Just
Credit.
today?
Well, every day.
Okay.
United Credit Education Services helps people. So if you yourself or someone you know, or our last week's show, which was on addiction, if someone goes through that process, they tend to have a lot of things that go bad. Their job, their maybe their relationship, and of course their credit falls in line too, because kind of nothing else matters when you're going through that problem. Warren is a great resource to help those people. So Warren will be back after break talking about those things and what's going on and how he can help you with your credit repair. Credit repair Minnesota at Gmail is his email. So I know there's a lot of people out there that need help with the credit repair because that is very, very important in anything. We'll get into that more. You're listening to the Stockwell Roueche Show. I'm Jason Stockwell with Remax Results.
And Josh Roueche, Remax Advantage Plus.
We'll be back.
So charge it up, ain't got no cash today. And charge it up, plastic fee.
Got some music there.
Welcome back to the Stockwell Roueche Show. Charge it up today, huh? I'm Jason Stockwell with Remax Results.
Josh Roueche, Remax Advantage Plus.
A lot of people, I think, are doing that now more than they have in the last 5 to 7 years with the way the economy is going, and a lot of jobs and a lot of money going around now, which is great. But with that,
Good song,
got to be
Chris.
cautious, right, Warren?
Absolutely. That should not be your theme song. So just so you know, it should not be your
It's
theme
not like the
song.
Flintstones charge.
Yes. It's okay to use charge cards, and you want to do that. That's going to help you establish good credit, but you want to be cautious how you use them. Make sure you're making your payments on time and keeping that percentage of usage down, and that's going to benefit you.
Yep. So for you folks out there, you either maybe are in college. Well, maybe not. You might not be listening to the radio. You're probably listening to something else. But you have a granddaughter or son in college. You have a son or daughter in college, or maybe you yourself went back to college. But I remember in college,
Guilty.
The people at would go on you go into to get your mail, and they'd be sitting there with the booth, and they say sign up for free. You can get $500, $1,000, $2,000, whatever for your credit. So that segment, that credit card companies, they have to be booming right now in their
crazy.
business, I would imagine, right? With the way the economy's come around and
I
everything.
think Joshua still has the T-shirt.
Yeah, I do. I still do.
Oh, you get a free you get free stuff.
T-shirt.
too, right?
The Twins games,
and
you can get
the
them.
cup holder thing or whatever.
Every time I go
hand
into
cooler.
Home Depot or Target,
I used to get
asked.
excited getting that piece of mail, and there's a hard card in there. I was like, yes. That was anyway.
They're getting more aggressive. Talking credit card companies specifically, they're getting more aggressive with their pitches. I went into Home Depot and bought a dehumidifier and a couple other things, and it was probably a $250 total bill. And they said, sign up for this now, and you will get $50 off of this order, which it's like someone handing you $50.
So you did.
So I did on that one.
Sure.
Right?
Absolutely.
But
In college,
I'm against that most of the time, but I'm like, $50, that makes sense. I mean, so what do you think, Warren?
I think, more than ever, your credit score, it's like a vital sign, right? It's being monitored at all times. And in order, a lot of times, to take advantage of what you did, you have to have a good score. If they went and said, hey, sign up, obviously you got to fill that app out, and you fill that app out and your score's not good, guess what? No $50 for you. Right?
Yeah,
so as long as you have a good score, you're able to take advantages of things like that. Those types of incentives. We see 0%. I saw was it GMC or Chevrolet just had again 0% on certain trucks. What a great way to, if you need a vehicle, to be able to buy a car. Now, I mean, we could talk to Jason here at Envoy. I don't think they're ever going to have a 0% on a mortgage, but again, the better your score
would be a great program.
Wouldn't that be a nice program?
Right.
I mean, but the better your score is, it's thousands of dollars, folks, thousands of dollars, and over the course of your lifetime, it could be hundreds of thousands of dollars that you can save. So having a good credit score today is more important than it's ever been, and you want to pay attention to that because it's going to put you in just a better financial situation.
Jason, when you went to college, did you know what a credit score was?
No.
I had no clue either. So I didn't know you had to pay that stuff back. So when I got out and I started getting in the real world outside of college, I had a lot of debt because there was these cards.
So I bet some of you out there have sons, daughters, or
it should be taught in high
grandchildren.
school. I think there should be a class that's taught about credit in high school or some kind of education.
Yeah.
Because we're putting these kids in college, and I'm guilty. I was getting those cards, and I would take it, and that's what I'd take out. And I would,
Use them.
use them up.
And then they get to a point where they're high and they start getting paid back, and the co-signer is mom and pa, or it's grandma and grandpa, and part of your graduation gift may be paying off your credit card. I don't know. We'll see.
Right.
Well, as we talk to a lot of our clients, too, we also make it very clear that not only are we going to help you remove those negative derogatory items from your credit reports, but we're also going to provide education, because you guys are absolutely right. Education really is the key. And, like we've said before on the show, knowledge is power, right?
Yep.
And, again, to have knowledge in these areas, I mean, you even think about this radio show, and some of you out there listening today, whether you're driving or sitting at your home or whatever, and you really have a great team of people here, in real estate, in mortgage, and again with Kyle, maybe helping you to find a home where you can rent to buy, those kinds of things. You want to pay attention to that and grab that knowledge and use the resource you have right here with these great people and professionals that can help put your life on a better track.
Yep. And part of the thing that Warren's company provides it. So there's been some news. If you follow Credit Repair at all, there's been a company that actually was very large in the state here in Minnesota, and they actually got, I don't know if they're closed down in business totally. I imagine they are. There's a huge investigation going on.
There was how many government programs walked in the doors?
Yeah, government agencies came in and raided the building and all those sorts of things. So what you want to do is make sure that if you're going to go in and do credit repair, it's a must in many cases, and a lot of people don't take that first step. So they don't understand what it costs them on a monthly basis or yearly basis by saying, you know what, I'll just pay my higher insurance, or I'll just pay that extra whatever percent because I just have bad credit. So I would probably state this, I don't know statistics, but that the cost of doing a credit repair for yourself, if you take the initiative, will save you 5, 10, 100 times. Who knows how many times the actual investment is, right? It's an investment in you and your own self, essentially.
It's almost like getting a doctor checkup. You need to know what's going on with your credit at all times, and you need to be, how the doctor says you have to go in, what 2 or 3 times a year to get your checkup, see what's going on with you.
Once every 3 years.
You should really. Oh, that's how us guys work like that. But I think as you go and you start learning about credit, you need to follow up, because there's things that pop up. Even though you could have the best credit in the world, if you have a similar name to somebody or something like that, something will pop up on that credit report, and you have to dispute that or figure out how to get that off.
Yep, and it usually happens in the 9th hour or the 11th hour, if you will.
When you're trying to get a house, right?
So the other thing you want to know is that when you go on to Warren's site and you walk through the program, they actually have your own login.
Yep.
Right,
Yep.
Warren, with
Yep.
updates, and that's where the coaching comes in and on the updates on everything that's going on, right?
Absolutely.
On the website.
Yep.
So you have your own profile. So you can see real time what's going on. You don't have to sit there and think,
I wonder what's going on.
I wonder if it's going to be up next month or where it's at or what I'm doing, right, Warren?
Absolutely. Yep. So we got a little bit of an interactive process with you. Not very much at all. I mean, it's really kind of a hands-off for you, but there is a little bit of a process where you're, involved, and we'll walk you through that. It's very, very simple on your behalf. But the point of that is, like you said, you're aware then, and you're learning, and you're getting educated. And once, our goal is to get your credit score up, and then have it stay there for the rest of your life, literally,
Yep.
And so you'll understand those things and be able to take, advantage of that.
And Warren's local, lives right here in the great Twin Cities, Minnesota. So he's right here, so you can always reach out to him. The one thing I had a question about credit repair, and it has to do with millennials. So I know maybe not a lot of millennials are listening to this show. They might be watching us on YouTube, maybe. But millennials, the word that I hear on the USA Today or on the news, and Jason and Warren can attest to this, or maybe even give feedback on this, of course, but is that the college debt load that they're taking on is so high that it's hindering them from buying a home or doing any other things.
Unless you're a doctor.
Is that the case, Jason and Warren?
Well, I would say absolutely. We see student loans, it seems like every year they're more and more. And, when you have to account for what that balance is, so many of the programs, FHA, some of the government loans will allow you to defer that as long as you're still enrolled. But if not, you have to account for what that balance is, and it's hindering them from a debt load.
From a debt ratio, right? From a DTI ratio.
So does that mean, that begs a question, does that mean millennials would be less qualifiable to get a mortgage?
I would say no overall. Fair lending, don't discriminate. But it definitely has an impact. There's challenges amongst it, but it is definitely a common trend to see millennials. I have a couple this week that, we're struggling to find that price bucket or price bracket. It affects it absolutely if you have a student loan.
But there's also different things you can do with student loans. Like when I graduated and I went out there, I had a bunch of student loans. But what I did is I was...
And credit card.
Well, and credit cards. But what I did is I got educated on it. When I step into it and I try to learn what the heck is going on, and I consolidated it. So I was educated on, okay, so I figured out what debt to income ratio was and the monthly payment. So what I did is I took all my student loans and consolidated all in one. So I lowered my monthly debt, my monthly payment, and I got a better DTI for me to go out and buy a house. So there's things that you can work around. Just make sure you're talking to a professional to help you get through that and tell you what you need to do to get that debt ratio down so you can qualify for more for a home.
Warren, I have a question. For your clients that you help and they go through and do a credit repair, what is it typically? Bankruptcies? Is that the kind of, what's the kind of I know it's you could help anybody realistically unless you have an 800 credit score or you have a 7 or above 700, maybe there isn't much help needed there. But what's going on? Job loss, bankruptcy? Or?
Yeah. 80% of all credit reports have errors on them.
Yep.
That's
even the good ones.
Yep. Exactly.
Wow.
80% of all credit reports have errors on them, causing scores to go down. Like you guys said, sometimes even the fact of putting in a social security number, messing up some digits on that. Yep. And I'm sure, Jason, at the mortgage company, you show people their credit reports. A lot of times they go, what's that? I didn't know that was on there, right? You see
Does that happen a lot, Jason?
Absolutely. I've just grown a habit where I'm going through that thing at application line by line, all the way into addresses and names because little things pop up and it's...
Well, that's staggering. 80% of them have an error.
Well, there's another Josh Roueche out in Texas, and I have no idea who that guy is.
Right.
Wow.
And he's popped up on mine before.
And he has a free T-shirt.
Yeah, and he's got a lot of free T-shirts.
Yeah. So what we're going to do is challenge all those negative items. With the laws that are in place, the Fair Credit Reporting Act says you have the right to open an investigation. So basically, we're going to ask the credit bureaus to investigate this and really hold them accountable to prove that it belongs on there, rather than having you chase everything down and trying to prove it and spending your time doing it. There's laws in place to protect you from those errors being on there. So we're on your behalf holding them accountable, and they're going to clean that.
So if someone has a question for credit repair and they just want to see if there's an error, Warren, do they reach out to you and just say, hey, can you just check and see if I might be a candidate for the program?
Yes and no, and we can talk about that as we come back.
We'll bring up back what your approach is if you think you may need help or you do want to check out your credit. I'm Jason Stockwell with RE/MAX Results.
I'm Josh Roueche, RE/MAX Advantage Plus.
More with that and more on rentals and investment properties. We'll be back.
I need a dollar, 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 that's what I need. Hey, hey. Well, I need a dollar, 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 that's what I Every card I tried came back tonight and said no, 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 bad credit.
Welcome back to the Stockwell Roueche Show. I'm Jason Stockwell with RE/MAX Results.
Josh Roueche, RE/MAX Advantage Plus.
So we're talking about credit, bad credit, good credit.
I didn't know there was a song out there. It's bad when there's a song out there.
That is that's song. Your company song, isn't it, Warren?
I guess so, right? Yeah. It followed up good with the other one we had before that, with the Charge It Up.
Yes, exactly. Thank you, Chris, for the great intro music. So we were talking real briefly with Warren about how does someone. There's a lot of everybody out there has a score, right? All of us, all of you listening, me, Josh, everybody has a score. And 80% of us have errors in our scores, in our credit reports, I should say. So who is it right for? I mean...
Well, we were talking about how do you obtain a credit score, and honestly, you think it should be really simple, and it can be, but sometimes it can be frustrating also. A lot of our clients are coming from places, like the mortgage company, the real estate professionals, where people have said, okay, we want to buy a house, and then somebody like Jason at Envoy is like, sorry, we've got a problem here. Your credit score needs to be higher. And then they're like, well, who can help? And then we'll get that referral from, Jason, and then help those folks get their score up so they can do their mortgage. But or maybe folks are buying a car. They find out their credit score is poor. There's ways to get your credit score online. A lot of those ways you have to pay. We cannot pull your credit score for you just to take a look at it.
I got it. Yeah. Okay.
In order to have a credit score, though, you got to have something on your credit to have a score, correct? And that would be considered, what, a trade line?
Yep.
So,
I mean, trade lines. So, the two things that we always talk about that increase your credit or, make up your score, one of the pieces is, the negative items and then the positive things you're doing, the trade lines and so forth.
Paying your bills.
Paying your bills on time, and so actually, going to college, getting a credit card isn't a bad thing. We were joking around about it, but it's really not a bad thing if you know how to use that card. Even have a student that's maybe a senior in high school. A lot of credit unions, different places have student credit cards where you can go, or maybe a parent would co-sign with a with a low maximum on that, even of $300. Now, if that student will go use that card and put $30 on there a month and pay it off, that's going to start establishing credit. Nice. It'll show that hey, this person has credit. They don't use all of it. And they make their payments on time. And, that longevity of doing that over and over and over and over again is going to establish some good credit rapport with. So
real quick, it sounds reactive to me, though. You go to buy a house and all of a sudden Jason at Envoy says, oh, you can't buy. So then you got to go to Warren and get a credit repair. Or you go to buy a car and you can't buy. Is there anything you can do to be proactive? Other than you said checking it just online?
Absolutely. And get educated. That knowledge, again, is power. And so if you're out there listening and you're like, yeah, I want to buy a house, but, maybe not right now, or like we said, maybe you're in college or you just got out of college, or, you see yourself in home ownership within the next, year to 5 years, you need to think about where your score is at and what you're going to do to have that ready.
Be proactive and reach out to Jason or someone to do that. Same thing, even if you're not a brand new buyer. If you're moving, if you're downsizing or upsizing or whatever you want to call it, but if you're taking your house, selling your home, that you want to reach out early enough to know the circumstances before you find a house, fall in love, and then say, oh, shoot, now we have an issue because our rate's going to be higher than we thought or something.
Well, not only that, I'm going through an issue right now where I've got a new buyer who was pre-approved, had credit pulled. It was a short sale, and it was a 203K loan. So what happened was it's lasted about 3 to 4 months for this process to take place, and they repulled credit. And before they were qualified, now they repulled credit and they found out a new collection popped up, which dropped their score below where they couldn't qualify anymore. So you can still take care of that. What we did is we had to dispute that. We had the collection agency actually type up a letter saying they will delete it off the credit repair. So we did a rapid rescore to repair that credit, and now their score's back up, and now we're closing next week. So there's things that you can do with stuff, but you got to be aware that even on the lending side, if was it 3 months that you get with a credit report, and then you got to repull it after that 3 month period. So it It can be frustrating. I know we were super frustrated. The loan officer was about ready to give up on it. I had people on the phone.
You got to hang in there. There's a lot of situations.
But there's ways that you can clear it up.
That are going on in real estate right now that are, even though things are better than they've been in a long time, there's a lot of tricky stuff going on because low appraisals, credit stuff, special financing issues. You got to hang in there. If you're a seller and you're going through that right now, hang in there. Most likely you can get it worked out.
Just really get coaching and help. Get help.
So switching gears real quick. So thanks, Warren Barfeld. Switching gears to, this could still tie into credit actually, but rentals and investment properties. So Kyle Jordahl, the CEO of Vanquish AP Property Management Company, said he obviously knows a lot about rentals, manages a lot of them for other people, including myself, and in investment properties, and was talking about where things are headed with that. What are you seeing out there now? What's going on and where are things headed?
Well, I just want to make another point for Warren as well. It's important to have your ducks in a row beforehand. Right now, you're seeing investment properties disappearing, and you're not seeing them at the price that you might have seen 2-3 years ago. So it's important to have yourself set up ahead of time to make sure you're not missing out on a deal.
That's a very good point. There's very few opportunities, if any, that there were 3 years ago. They are just, the prices are just crazy, and they're still working because the median sale and appreciation has happened on the other end. So the rentals are still working too because the rental market is still very high.
Well, and you have so many investors are taking advantage of that price range. Anywhere from 100 to 200, where they're paying cash, and you're coming in the marketplace where it's just tough.
I've actually got a stat here. 63% more investors are looking at $200,000 plus houses.
Wow, they are. They're jumping up.
So to cover some of those costs, rental rates are going to have to increase.
Yep.
So there used to be always looking. I had a few people that I know that were always that way too. It had to be pretty much 130 or under to buy,
and that's an investor's dream. That price range. And
it's gone.
Right, that's not there anymore.
If they do come up in that range, they're gone right away, and they get bid up anyway. So the market in the mid-range, we're talking you people out there that are buying 300, 400, 500, even and up. You guys are buying. So that's freed up people to take on and say, I'll buy an investment property or flip for 200, 250, 300, even more sometimes.
Right.
And then the rental, same thing. People are paying a lot more for a rental. Crazy sometimes. I see some of these, I shouldn't say crazy, but they're really high for some of these rentals because you're used to seeing these duplexes for 150 and they're buying it for 270. So what's going on? Kyle, go to that. I'll let you talk.
They can because the rental rates are there. People are willing to pay that, and it's difficult for a lot of people to find a place. Just like home sales right now are picking up in the spring through June, it's the same way with rentals. Everyone's moving, whether it be they want a new place, they're sick of a landlord, whatever it is. There's a lot of activity.
There's a lot of those guys that have been renting, and they see the increase in their rental rates going up. We're like, oh my gosh, we got to get out of this and go find a house finally because we don't want to be paying that type of rent anymore.
Well, and do your rental applications have to put in their credit score then, or to pull a credit on them, Kyle?
Typically, yes.
What are you seeing on that?
You're finding situations.
Lower credit, higher credit, mid credit? What are you seeing?
We see it all over the place.
Really?
Typically, in the past, people have been renting because of their credit issues. And now you're seeing it's very popular to rent right now and have flexibility and move around and not be stuck in something long term. Maybe they can't acquire financing. So people, it's staying steady, and it's increasing too. More people are moving towards the rentals,
and they're even not just a credit issue. So, I'll personally.
We had what was it? The guy that was developing downtown Minneapolis.
Bob Lux?
Yep, he was on here talking about how the rentals right now are going sky high, and they're, instead of flipping, condo conversions where they would flip rental properties into condos, they're holding back and keeping them rentals because of the rental rates are so high.
Well, and you're going to see a push, too, from a lot of the renters that are already in those downtown markets. There's so much new construction and new buildings of designed rentals.
They're designing rentals now because the rental rates are great instead of doing the conversions or the condos.
Right. And a lot of people can't afford the rates that are coming out on these new construction properties. So they're moving out into more suburban areas when there's a lot of rentals in those markets too.
And so if you have a rental and you like it, then keep it and call Kyle with Vanquish AP or John with Vanquish AP, because they'll happily help you out, and they're great. They have wonderful service. If you have a rental and you hate it, don't listen to the commercials and keep it. Call us. Now is the best time to sell your rental than it has been in a decade, since the crash, since 2008, or 2007, 2008. So eight years or so, or 7 to 8 years. So now is the best time to do that. But if you like it and you don't mind it, but you don't want to have the hassle, call these guys, give them a shot. Call Kyle and John at Vanquish AP. And then if you are, a renter or a buyer, get your ducks in a row. Call the lender right away. If you need help,
call us.
Call Warren.
We'll point you in the right direction as well.
And you can find all the info on talktwincitiesrealestate.com, or you can call us 651-400-0773. And on Facebook under Stockwell Roueche Show, we'll have a lot of information there. I have one interesting thing I want to bring up when we come back, and it has to do with longevity of your life. It's a cool little statistic we have coming up when we get back.
Here we go.
Jason Stockwell with RE/MAX Results.
Josh Roueche, RE/MAX Advantage Plus.
With us, Warren Bauerfeld, United Credit Education Services, Jason Light, Envoy Mortgage, and Kyle Jordahl with Vanquish AP Property Management. We'll be back. Welcome back to the Stockwell Roueche Show. I'm Jason Stockwell. Josh Roueche jamming out here.
I am. Josh Roueche, RE/MAX Advantage Plus, taking advantage of Chris and his music selection.
Before break left, there was a Beyonce, I believe it was Beyonce, that Chris had on before break, and she said, paying bills. So we will always be paying bills your whole life, whether you rent, own, whether you're rich, poor.
Right.
You have to pay bills. It's part of our system. Like it, love it or hate it, it's part of the way the world works. So you have high interest rates. If you have worse credit, if you have poor credit, you have higher interest rates. You have additional fees. You get rejected on car loans. You get denied for home loans. And you have higher insurance premiums. You are the ones that are being taken advantage of, because they can take advantage of you, because they know you have to pay these bills, and they're going to take it to you because you're a higher risk. You may not be a higher risk. You may have an error. So part of the thing that I wanted to go over with Warren's pamphlet here, he has a pamphlet for his company, which is really cool. And the facts are that $200,000 is what it could cost you in interest, expenses, and fees over the course of your lifetime with less than excellent credit. So take control of your credit situation and figure that out, and call and reach out. Call Jason. He can help out. And Warren, of course, can help out as well. So Warren can be reached at 612-889-1117, 612-889-1117. Another interesting statistic he's already alluded to, already said, is 80% of all credit reports have errors. And 1/2 of employers use credit score as a factor in determining who they will hire.
Isn't that crazy?
So important, folks.
That wasn't the case years ago.
So if you, a loved one, has issues, help them out, or to help yourself out, actually, more importantly, help yourself out. With longevity, I wanted to just touch base on this, because this is one of my favorite things that Elliot Eisenberg, he's a PhD, and he does this graphs and laughs. He's an economist. And he talks about lifespan and long life. So we're going to be paying our bills for a long time is bottom line. But here's what he says. Of every 100,000 persons born in 1900, my great-grandfather was born in 1900, 13 of them made it to age 100. Only 13 made it to age 100. The same statistic is projected to be 199 for those born in 1950, and 1,968 of them born in 2010. So in 2010, 1,968 people reach 100 years old.
Isn't that crazy?
That's awesome. Similarly, in 1900, 25% of all people died. 1/4 of the entire population died before age 20. I shouldn't laugh. That's very sad. But 1/4 died before age 20. By 1950, that percentage declined down to only 5.3%. And in 2010, anybody born in 2010 or after, only 1.5% will will die before the age of 20, and it's due mostly to accidents, drugs, and guns. Live long and prosper is what he says. Live long and prosper. Very cool.
Interesting stats.
So hopefully,
Where were we going with that?
that was just a cool deal that I wanted to share with everybody, because I know there's a lot of our loyal listeners out there, and a lot of them may be in that silver hair or that silver hair tsunami age group. I'm getting it actually right here.
I've got some too. I got a haircut, and they told me you got great hair.
And
what?
Maybe one of us will live to 100. I don't know. We'll see.
Won't be me.
We'd find out if it was me first, right?
more first, yes. Yes. So with that, with the information on that credit report is very important, we're finding. And don't spend, if you do live to 100, don't pay hundreds of extra thousands of dollars in fees. Get your credit fixed. If you have a property and need it fixed or need it managed and want to get a management company in to help out for very worth every penny, I would contact Kyle at Vanquish AP 651 503 1101 651 503 1101. The other thing we wanted to touch base on for you out there, if you have we were talking on break about a scenario where you have a home and you're going to buy a new home, right, Josh?
Right, correct.
And Warren actually brought Warren. Thank you for bringing this up.
Well, I have two girls that are married, and they're kind of in that age, starting families and different things, and they're getting to that point. They each own a place now, and it's like, at some point here when we decide to move up in housing, what would we do with our house?
Do we
sell it
right,
and to use that in our, to obtain our new mortgage, with Envoy Mortgage with Jason, or do we, maybe look at, having Kyle come in and professionally rent that out and turn that into an income source?
It would be my recommendation to hang on to it if you're in that situation, and here's why.
If you can.
If you can afford to and cash flow it even better. If you've got a single-family home or townhouse, condo, anything like that you're looking to move into a bigger place, your buyer pool is much bigger in a home like that rather than a designed rental. You're cutting off a lot of buyers who are looking for a place if you're selling an investment property. You're looking only at investors with investment properties. With single-family homes, stuff like that, you can sell to investors and also all the first-time home buyers and all that.
And I think that a lot of people, I talk to sellers every day, and they say, I don't want the headache. Oh, that's such a hassle.
It is, yeah.
Renting. Okay, so it can be, but again, I went to a couple real estate investment seminars when I was younger, and I still go to them. Where else can you get it where you own something
and someone pays
is paying for it for you, and you still own it? Right. It doesn't get much better than that unless you're Warren Buffett, right? I mean,
Well, how do you think Warren Buffett made his money?
Well, I don't know.
That's exactly how
he was born with it, right? No,
and he's got people handling his real estate,
right?
Yes. So if you have the ability, if it's a home that's just decked out and it's perfect and all that, and and I understand if you have, and at the price point it doesn't make sense and all that to do a rental, but if it's a starter or a townhouse or something like that, might be a perfect scenario to have an asset that you can have good tenants in, and then cash flow and use that money towards, one, you're paying down your principal on it. Two, you're still maintaining ownership, and then you can depreciate that off your income. There's so many benefits that people just brush off and say, oh, I'll just throw it into the stock market and wait for the stock market to crash, right?
Well, let's talk about financing too on that, Jason. When someone does something like that, can you get them pre-approved for a new home showing that this one's going to be rented, or do they have to qualify for both mortgages moving forward?
That's a great point. It's very crucial to be very proactive in a scenario like that. You want to hit that head on. If there's a history of having rentals prior to this for 12 months, you can calculate that.
Right.
If not, let's say I lived in it and I'm going to buy a new one, and then I have to swing both, right?
Sometimes you have to swing both.
You got to qualify for both payments.
Doesn't it have to be on the Schedule E on your tax return to show that you're claiming it as a rental for you to count that as rental income?
Yeah, it's all risk. You have to show that you've had a history of having this income. Otherwise,
right.
That's the case.
But there's a lot of you out there that can do both. You've saved, you've got equity in it. You actually can get approved for your new place and hold the old place.
See, things like that is why you want to reach out and talk to a professional, because you definitely want to learn how things work if you're going to do something like that. And that's why it's good to reach out to one of us here on the show,
Yep.
or just reach out to anyone that knows what they're doing as far as the mortgage and real estate side.
Yeah, and those things can help you long term. My broker gave me advice in 2007, John Colopy, love him to death, love him or hate him, he's a great
John.
guy.
I like John.
But he said, buy a house every year for the rest of your life, and you will never have to worry about retirement. Sounds unreasonable maybe to some of you, sounds crazy, sounds out of whack, or like, how can you do that? It is totally possible. You just have to really look, find ones, and don't be afraid. Pull the trigger on one that makes sense. Just do it. It's an investment. It's that you have control of. It's not putting money into the stock market and then letting it crash, right? No offense to brokers out there who are dual stocks and all this stuff, but we don't have control over that, right? You can make a lot of money in the stock market. You can lose a lot of money in the stock market. Same thing in real estate, but at least you have control over it and you can maintain it yourself. So,
well, what a good show today. We had a great time today.
So thank you. Kyle Jordahl, Vanquish AP, 651-503-1107. You can reach out to him.
1101.
I'm sorry, 1101, 651-503-1101. Thank you.
Look on Phonics.
Warren Bauerfeld, 612-889-1117. And Jason, Light Envoy Mortgage, 612-419-4517. Thanks so much, and we'll be back next week. I'm Jason Stockwell with RE/MAX Results.
Josh Roueche, RE/MAX Advantage Plus.
Remember, love yourself and love others.